Alrighty, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. So, another rally back in equities. I mean, it's the same stuff, right? Nothing changed. We have heard from the Fed chairman. He's actually still speaking right now. Everything is he repeated the same message, so it gave no reason for a reversal in anything. And I've got my eye on a couple of things I'm going to point out to you, and this is actually more for if we start to see certain things happen. So let's first of all, let's talk about you guys might have seen this reversal in some of the emerging market currencies. Like here's the rand. Also, if you look at the dollar Mexican peso, had a nice bounce off the lows. It's kind of holding some support here. And there's something that I retweeted about. It was from, I think it was from JP Morgan is who it was. It was a note from one of the banks about, got to reduce position sizes or reduce exposure in emerging market currencies. JP Morgan said reduce market weight due to rise in yields. And what we're seeing right now is they're backing off. Let me pull up the 10-year. Oops, let me go down over here. So here's the 10-year. We've backed off pretty good from, we were almost at 150. And by the way, everybody should know this is really, really key resistance. And we've been talking about this big move in yields, but coming back to the breakdown point, and that's why Stelios this morning was talking about a break above 150. And basically we came right up to previous support. It's acting as current resistance and we're backing away. That would be expected technically, right? You would expect it to come off from here. And matter of fact, you could probably do this and say, okay, we're in a channel, right? Oops, let me adjust that a little bit here. We're in a channel, such big resistance with divergent relative strength that it made sense for us to back off. It's probably going to take a little bit of time to break through 150 through that, big resistance. But as a result, with yields coming down from resistance, it has allowed for equities to move higher. And that's why in the chat room, I'm like, hey, equities are going to back off. It's probably going to allow stocks to move higher from here. So we got the S&P that's working higher. We have the Dow that's at all-time highs. I mean, look at the Dow. It's like all-time highs, baby. No bubbles. NASDAQ's bouncing pretty good, after the false breakdown. So, everything is basically status quo. We're seeing dollar weaken. We're seeing commodity currencies rally. We're seeing the Aussie and the Aussie and the Kiwi continue to rally here. So nothing is changing and nothing's changed. So, for all intents and purposes, guys, we just have to realize that, risk is going to stay bid here. And there's no real reason for things to reverse as of right now. So that's it. I mean, I don't know what else to say other than, stocks look like they're going to recover. Andre posted a good chart today that said, that points out this inverted head and shoulder pattern, which should take us back to highs, right, in the S&P. So where does that put the Dow? Puts the Dow probably another, several hundred points higher. Probably puts the NASDAQ in recovery mode back to, 13,500, I would assume, somewhere, this previous support is probably going to act as resistance on the way back up. And we're probably going to see continued dollar weakness. Now, one of the things that also, I was sitting there looking at copper. Copper is at new highs, and daily sentiment index was at 93. Today, it's going to be at 94 or maybe even 95. So it's going to continue to, be at very elevated levels. And I think that you know, we're at risk. I mean, you know, today or tomorrow, we're probably going to see it. You know, I don't think it's today because obviously everybody feels good about what Powell's saying and where the markets are at. But in all actuality, I think that we're probably just going to continue higher here, and you just got to assume that that the markets are going to continue, and you know, there's nothing we can really, unless you're going with the trend, you know, unless you're going, you know, in the general direction of the markets, you know, that's going to be the path of least resistance for now. And you know, where does that take to like some of these major currencies? I mean, you got the dollar Canadian that's at 161% extension. You know, we're trying to find some, you know, we're trying to stop here. I don't know if that's, you really want to call it support, but we do have a lot of support here. Everything's divergent, but you know, has divergence really stopped the market at all? Has it? You know, it hasn't. So, I mean, you know, there's really nothing here that says, and it screams to me, hey, we're reversing, you know, other than us hitting some pretty key levels. I would say that the emerging market currencies like, you know, the dollar Mexican peso and the US dollar South African rand, I think we do have to watch because yeah, if yields break out, you know, these things are probably gonna, you know, go higher, but that doesn't mean that they can't come lower first before going higher. I'm feeling pretty, you know, excited about right now about the potential of a pound reversal. Um, you know, the pound might come off a little bit, and that's why I really like the euro sterling on the long side here, but I'm not fully committed to this one either because I still think that you know, there's some work to do, you know, to see a reversal here. So other than that, guys, it is very much all the same. I mean, you know, we have a Fed chairman that's not rocking the boat. I mean, look at, you know, look at the Dow. Look where the Dow's going. The Dow's at all-time highs. That has to pull up the rest of the market from, you know, from what I can see. So just be really careful, guys. The only outliers right now are the emerging market currencies, but I'm not, you know, super excited about those because if equity markets continue to plow higher, those will eventually go higher. Now, you know, does the dollar Mexican peso come back down to you know, to the 618, maybe here to 2025 first before going higher? And I think that might be more of the case. That might be what we're looking at near term. So just yeah, anyway, that's it. I wish I had something better to report other than, you know, it's all still, yeah, the same. And Alan says business as usual. And you know, I'm actually going to pull off my pound Aussie, my pound New Zealand. I mean, I've had them long for a while, and you know, it's like after several weeks, and I've pulled some profits here and there, but overall, it's like they're not really going anywhere. And if anything, they're going to drop a little bit. So I'm probably just going to pull them off for now and then find places where I really want to be on the long side. Like, you know, what would create a move or a big like reversal, like in the Euro Aussie, like for an example, the Euro Aussie, I think if we get back above here, you know, 154 and change, then we're going to see it squeeze. But for right now, it's just, you know, continuing to drop. It's, I mean, these commodity currencies continue to stay strong. And I don't necessarily think that they should continue to stay strong, but they do. And, you know, as long as copper continues to stay bullish, why's the Aussie got reason to reverse? I think we're probably within a day or two of it reversing, but you know, that's pretty much it. But yeah, Alan says business as usual, and that's it. You know, business as usual. I am very, very nervous about, you know, risk assets at these levels, but it doesn't mean that they're going to turn anytime in the near future. So, one of the other things, let me talk to you guys a little bit about the dollar Swiss. I did have a pretty aggressive position in the dollar Swiss from yesterday. I did take it off because we hit this 127% extension. What I'd like to see happen is, you know, if you remember the 10-year yield chart that I just showed you, what I'd love to see happen here is a move in the dollar Swiss back to 90 1/4, right about here, right? And then re-engage on the long side down there. That's what I'm thinking, because I do think that yields are going to eventually break higher. I just think that they're going to pull back first. Like the 10-year yield is going to pull back first. The dollar Swiss is going to pull back a little bit before we actually end up, making that substantial move. And that also brings up, like the dollar yen, these other yen pairs. If you look at the dollar yen's backing off too. I think that the dollar yen could, make new highs. I think the dollar Swiss can make new highs. I think that there is a risk of, these other yen pairs screaming higher. I mean, they're already, look at the pound yen, look at the Aussie yen, look at the New Zealand yen. I mean, everything's moving in that general direction with yields. But for right now, I think we just got to be, a little patient as far as looking for some of these reversals. Amir asked for platinum. Platinum, I'm sure it looks decent. Hold on, I only look at it because of you. Oh, all right. Well, that isn't doing anything. I guess my analysis is going to have to be the same as the last time we talked. So yeah, this would be the first level of support, would be 1200, and then back down here, maybe towards these levels. But let's do some work really quick, Amir, just to make sure I'm on the right track. So the 24% retracement is actually down here because we finally did, show a peak. So that comes down to 1157. Or if we make a move from here to the 38% retracement, it's actually going to coincide with this 1043. So this would probably be the more attractive level for that. If I was really trying to pick up platinum and trying to catch a good bounce, it'd probably be at more of the 38% retracement. Okay. And Dimitri said, hey, Blake, the US dollar FXCM basket is approaching long-term 38% support. And Dimitri says a little bit more patience for, let's see, for dollar longs. Yeah, let's see, US dollar. I think it's this. Let me make sure. Yes. I haven't looked at this in a while. Let me clear everything here. Yeah, we're pretty much there, right? And unless I'm drawing it incorrectly. And we're pretty much there. So yeah, I mean, really, really close to support for the dollar. This is the FXCM dollar index. Now, I don't trade it. So I'm not I don't have a lot of opinion here. I'd probably focus more on the dollar index that's still holding up, but I know it's a better basket. It's just I don't know if it's as tradable, but I think you could probably use them in just together, if you will. All right, guys. I hope you all have a great day. I was hoping for some volatility today. It just doesn't look like we're gonna be getting the volatility I was hoping for. So, but that doesn't mean we won't get it. I'm trying to stay hopeful that that somehow today the market's just going to go boom, volatility time. We'll see. All right, I'll talk to you soon. Have a great one.